and welcome to Business Line. Anti-austerity party SYRIZA won Greece's general election on its promise to renegotiate the enormous bailout with the country's international creditors. Greeks voted for an end to the painful measures that have brought deep cuts to pensions, pay and jobs since the crisis started. Since then, the country's economy has shrunk by 25%. Let's take a closer look. Unemployment there stands at around 25%, with around half of young Greeks out of work. Those who do have a job earn on average around €600 per month. Greece borrowed €240 billion from the EU, the ECB and the IMF. And this is exactly what the Eurozone's finance ministers discussed when they met the day after the Greek election.
All will be fine as long as Greece abides by the rules and its commitments. That was the message from the first meeting of the Eurogroup following Sunday's win in Athens by anti-austerity party SYRIZA. Fellow Eurozone members have been playing down fears of new financial troubles ahead in the currency bloc, despite Greek election promises to write off some of its debts. Germany's foreign minister stressed that the Greek people had decided and must be respected. Germany will offer cooperation, but naturally assumes Greece will stick to its agreed commitments. If Greece was in any doubt about where its future lies, French President François Hollande was on hand to put them straight. Greece is in the Eurozone. It wants to stay in the Eurozone, and Greece will stay in the Eurozone. Britain's David Cameron was more cautious, urging Athens to keep tackling its budget deficit. And the IMF said it was ready to continue supporting Greece. So fairly positive, that is, perhaps until the talking begins.
Greece's debt is currently estimated at 175% of the GDP. That's €320 billion. Discussions about it frequently start with the presumption that it cannot be repaid. We are now joined by Euronews' business correspondent Symela Touchtidou. Symela, you're in Athens. Does the Greek debt really look unsustainable from there, and why?
Actually, Sasa, yes, it does. Let's not forget that the Greek debt ratio is 174% of GDP this year, an impossibly large number no matter how you look at it. And when the crisis erupted in Greece in 2009, that ratio was just 130%. Now, the Greeks feel that they had to suffer major sacrifices for a goal that could have never been achieved. And to service this debt, the Troika program foresees budget surpluses that grow year by year. Practically, this means that the sacrifices are far from over. Taxes should remain high. Public expenditure should stay low. And under these circumstances, it's hard to see unemployment going down.
We now know who's going to be in charge of Greece's finances. What can we expect from Yanis Varoufakis?
Well, Yanis Varoufakis is clear about his priorities. First, dealing with the humanitarian crisis. Then, reforming what he calls the triangle of sin in Greece: banks, media and private companies profiting from the procurement system of public projects. Thirdly, of course, renegotiating the loan agreement with our European partners. This would be the trickiest part. Yanis Varoufakis wants Europe to admit it chose the wrong recipe for Greece. His motto is that you cannot fix bankruptcy with more borrowing. And he wants Eurozone to be reformed so that it will be better equipped to deal with future financial crises.
That was Euronews' business correspondent from Athens, Symela Touchtidou. Symela, thank you very much.
Thank you.
Moving on from Greece, Russia's economy was hit hard by the latest rating cut. Why? Here is the story.
A muted reaction on Russia's financial markets to the downgrade of the country's sovereign credit rating by the S&P ratings agency. The ruble fell and the cost of borrowing rose for Moscow, but investors had anticipated the downgrade, which was to below investment grade or junk. S&P cited Russia's weakened economic growth prospects hit by low oil prices and Western sanctions over Ukraine. The downgrade will worsen the problem of cash flowing out of the country. Last year, companies and banks pulled their money out to the tune of more than $150 billion, worse than the previous record of $133 billion set in 2008 during the global financial crisis. Russia's economy is expected to slide into recession this year as falling oil prices depress export revenues and as sanctions bite further. The central bank recently said that GDP could shrink by at least 4.5% this year if oil averages $60 a barrel. Currently, it's around $48.
We asked Alexander Knobel, the head of the Gaida Institute's Foreign Trade Department, about the new reality for Russian businesses.
It depends on the company. It's true that Russian companies cannot borrow from the international markets to be able to refinance their debts. Some companies that are in, shall we say, a privileged position could get affordable and cheap loans in the national currency, and afterwards they could convert them into dollars, or they could also retain some part of their foreign revenue to be able to pay their external debts.
The ruble's declining value has had a big impact on Russia's people as well as on foreign business operating there. Many companies were forced to raise their prices in Russia and as a consequence, they expect weaker earnings. Microsoft is one of them. With more on the company, this is it. This is IT.
I bet Satya Nadella is now realizing how difficult it is to run one of the world's biggest tech companies. I'm talking, of course, about Microsoft, whose second quarter results failed to impress investors. Revenues were up to $26.5 billion thanks to the acquisition of Nokia's handset business, but net income was down to $5.8 billion. As the company pays the bill for a massive layoff plan, it said it is also facing the impact of a strong dollar on overseas sales. Not everything's on the downside, though. Devices and internet-based services show potential, with 6.6 million Xboxes sold, the Surface tablet starting to pay off, and cloud sales showing constant growth. Plus, the wow factor was finally back in Redmond last week when they unveiled HoloLens, an augmented reality headset capable of projecting holograms. But the operating system licenses that Microsoft sells to PC manufacturers fell 13%, and the push to replace XP on business desktops is losing steam. The next version of Windows better be good then, because as Nadella's predecessor Steve Ballmer used to say, Windows is the air we breathe. That was it. That was IT.
That is it for now. Thank you for watching and we'll see you next week.